What is going on, crypto peeps? So definitely a strange day in the market in that we didn't expect to see such a pullback. Most of the top coins are at least down close to 10% over the last 24 hours. You do see them recovering a bit just now. Oh, and before I forget, I'm joined by my esteemed guest, who is the Four Dummies guy. I don't even know his name, but he literally knows every single thing in the world. He's written thousands of books, so in case I need to ask him any questions, he's here. So the market cap today is at around $460.5 billion. That is about a 10% drop off from yesterday, which definitely constitutes a pullback. Obviously different markets have different definitions of what a pullback versus what a correction is. But in loose terms, we can define a pullback as a 5 to 10% drop off from recent highs, and a correction would be something that's over 10%. And usually anything over 10% would signify some sort of reversal. Obviously, that has to be confirmed by certain indicators in the charts, which we will go over in a second. The big story here to me is that Ethereum seems to be losing its steam. If you remember in the last few corrections, as well as in the crash, Ethereum was holding its own, even declining at a slower rate than Bitcoin was. And it seemed to be withstanding the market forces of the corrections and the crashes really well. And, you know, especially during the bear market, Ethereum looked like it was, you know, on its way to the flippening happening, the flippening being when Ethereum, the expected event when Ethereum overtakes Bitcoin as the number one market cap token or coin. But yeah, as of late, it just seems to be losing some steam, and there really isn't any news that coincides with this. I mean, all of the fundamentals and the news related to Ethereum is actually quite good. There was a tweet by Vitalik that came out, what was it, a couple days ago, talking about how, I'll pull it up if I find it, I'll post it on the screen, but talking about how the markets are volatile and, you know, be careful with your money, and the equity markets are still a better choice if you're looking for, you know, an investment decision. But I doubt that, you know, Ethereum would be losing so much steam just based off of one tweet. I just think that, you know, investors are putting more money into, during the dips, putting more money into Bitcoin now. And as Bitcoin rallies, you see more money coming in there out of, you know, the fear of missing out or wanting to catch Bitcoin's rally. And you know, there's kind of less attention focused on Ethereum. So it could just be market sentiment or normal market behavior. You do see these shifts and these fluctuations, especially during volatile markets. So I don't think there is anything to be concerned about, but it is interesting to see Ethereum losing steam when it has been literally a bull during the last few corrections, during the bear market, during the crash. So we'll see what goes on with Ethereum. The good news is that it is cheap at the moment, right? Compared to what the mean was in the last few months. So, and that gets me to my topic for the day, which is buying the dip. You always hear me say buy the dip. It's not just me. I didn't come up with that. That is something that all successful investors in the past, whether we're talking about cryptos or stocks or commodities, that is the number one strategy to partake in order to make money, right? The idea behind buying the dip is that a security or commodity or stock or coin is trading below the mean, right? The mean being the average. So if it's trading below the mean, the expectation is that it will revert to the mean at some point. So when the market dips, while most investors see that as a panic situation and a situation in which they need to liquidate their securities into fiat currency, you know, investors, smart investors, see that as an opportunity. Buying the dip. Obviously, there are different use cases where you do sometimes want to sell off and then buy back at the dip, right? In order to stop the bleeding and then pick up whatever you owned previously at a cheaper price. But in general terms, the dip by the dip is seen by successful investors as a prime opportunity to pick up crumbs that other investors have left behind out of fear, and not having the foresight that, hey, there's something called the mean, and we do revert to the mean eventually. So how do we do that based on a chart? How do we quickly find out the mean? Obviously, you can pull out an Excel spreadsheet and calculate the mean on an ongoing basis, which is tedious, or you can use indicators that we have available to us. Now, the mean in trading terms, let me just pull up a chart here. So obviously the mean means different things at different points in time, right? So the mean, if you're looking back here in mid 2017, the mean would be very different from what it was in December 2017, and different than what it is in February 2018. So how do we calculate the mean if it's something that's dynamic and ongoing? Well, we can use something like the Bollinger Bands. And basically the Bollinger Bands is let me just pull it up real quick. What is it telling me? Oh, okay, never mind. I just have to unhide it because I had it up already. So the Bollinger Bands, this middle line right here is a 20-day SMA, right? Or simple moving average. And the line above is 2 standard deviations away, and the line below is 2 standard deviations away in the other direction. And obviously you can change the value here of the SMA, but in terms of what is traditionally a Bollinger Band measurement, it incorporates the 20-day SMA. So this 20-day SMA, as we said, the moving average, or the mean, sorry, is different at different times, right? Because the price fluctuates. So currently, and this is an ongoing calculation, it's what's called a lagging indicator. And a lagging indicator just is basically an indicator that measures something after the price is already determined, right? So it's not like it's telling you the future. There are certain indicators that allow you to see not into the future, but allow you to kind of project what the price of the security would be in the future. A fib extension might be one of those things. But this is a lagging indicator, meaning it calculates itself based on historic and current pricing and doesn't tell you anything about the future. So this right here, we can identify this or use this as our mean. And this is a divergence away from the mean in an upward direction against 2 standard deviations. And this is a divergence away from the mean, 2 standard deviations below the mean, right? So at a dip, you'll see here when Bitcoin was trading below the 20-day SMA, right? It has a tendency to go back to the mean. Same thing when it's trading above the 20-day SMA, it has a tendency to revert to the mean. So really the easiest strategy in buying the dip would be to basically wait until Bitcoin or whatever it is that you're looking at goes below this 20-day SMA, buying, you keep buying the dip and waiting for it to revert to the mean. And obviously it doesn't go exactly to the 20-day SMA. That's why this is the mean. It overcorrects and goes above, and then overcorrects and goes below. So that would be the easiest strategy in buying the dip. I was getting a lot of questions in the Discord saying, oh, Bitcoin right now is at 10,500. Is that considered a dip? Well, yes. I mean, it is considered a dip. It is currently, what, 6% or so down from yesterday? Let's look. If I refresh this, because sometimes CoinMarketCap is outdated. If you 821, yeah, and it increased by 1.27% in the last hour. So I guess you could say it's somewhere around 6% down. So yes, I mean, that would be considered a pullback. It's certainly not a reversion to the mean, because look how far away from the 20-day SMA we are. Identifying this as our mean in this case. So we're far away from that. But if you don't own any Bitcoin, right, and you look, I don't know why you wouldn't, because as I always say, BTFD, buy the fucking dip. So if you don't own any Bitcoin, which you should have bought, obviously, during this massive dip right here, is it a good time to buy? Well, it depends on what we think Bitcoin is going to do in the future. Is it going to decline, keep declining? or is it going to continue along this consolidation path and then, spring upward again? Based on my analysis here, I'm looking at the RSI. So if you look at the RSI really carefully, anytime that Bitcoin in the recent past, anytime that Bitcoin has hit this 30 RSI right here, right, which is the oversold level. So anytime that it's touched it or crossed below it, it has gone back up to an oversold level, meaning that it has grown, right? Because usually the RSIs coincide with the price, so it fluctuates. The price fluctuates with the RSI and vice versa. So when you see a run up in the RSI, you usually see a rally in the price and vice versa. So anytime that Bitcoin in the recent past has touched or gone below the 30 mark on the RSI, it has rallied to an oversold level, right? So here you see it touched the 30, rallied to an oversold level, went below the 30, rallied to an oversold level. Here, which was just a few days ago, we went below the 30, but we still haven't rallied to the oversold level. So based on the RSI, that is one, right? We have one piece of confirmation that we still have some growing to do. But we don't trade based off of one indicator. So let's look at some other things. Let's look at the volume. Based on the day chart, there aren't any mass sell-offs, right? In the recent past, we don't have any mass sell-offs. So that's a good indication that people aren't dumping Bitcoin. Let's look at some other indicators. So let's take the three EMAs. So we have the 50, the 100, and the 200 here. Currently, Bitcoin is struggling to get above the 50. It hasn't been above the 50 since January 10th, 2018, earlier this year. It's struggling to get above that. So that is the major resistance point here. So you can wait for market confirmation that if Bitcoin closes above the 50, then we can see a rally. Let's take a look at some other indicators. I'm just going to hide the EMAs for now, just so it doesn't clutter up the screen. And I might hide the Bollinger Bands as well. There. What is forming here? We can see that a possible reverse head and shoulders pattern is forming here, right? Here you have the shoulder, here you have the head, and this might be another shoulder depending on how it plays out. A reverse head and shoulders, or an inverted head and shoulders, as you guys know, is definitely a bullish indicator, especially when coupled with other indicators that are indicating the same thing, that there is a bullish pattern on the horizon. We talked about the RSI. Here is the possible inverted head and shoulders. Whoops, didn't mean to do that. Here's the possible inverted head and shoulders. What other things can we look at? Let us look at the fib level. So if we draw a retracement, a fib retracement, we see that the 0.618, like one of these magic ratios, right, is a major point of contention for Bitcoin recently. So yesterday we saw Bitcoin struggle to get above that. We did go above the 0.618 level, which is 11,664, but it quickly came back down. So we weren't able to close above this. So not only is the 50-day EMA a point of resistance, the 0.618 is a point of resistance as well. Once we close above one of those two things, or both, we will see a rally upwards towards the next level. And lastly, let us draw some trend lines. So you always want to know what is the recent support and what is the recent resistance, right? Current resistance, current support. So we have this channel forming here, and we expect Bitcoin to be trading within this channel, doing its consolidation, right? Because it did have this nice bull run here, and now it has to consolidate. I mean, stocks, securities, coins, whatever, they're all tradable markets. And what is driving, the movement of these markets is investors. So investors get exhausted of buying and selling. That is what you see. That's why we have patterns, right? So you have this bull run here. Investors get exhausted of buying, running this thing up. And so you see a consolidation period. Some investors take profit, which is what occurs here, right? Which is what these small fluctuations are. Is this anything to be alarmed about? Not yet, right? Not yet. We don't have any indication of that, especially if this shoulder continues to form, and this does form an actual inverted head and shoulders, especially if the volume doesn't indicate any mass sell-offs, and we still have some growing to do on the RSI. So what we need to do in order for Bitcoin to keep growing is to break out of the 50-day EMA. Let me pull that back up so you could see how that looks. And it's no surprise that it coincides with this resistance line. So we needed to break and close out of this 50-day EMA and or this 0.618 fib level, which they are in very close distance to one another. Also, we need the 50-day EMA and the 100-day EMA we need the 50-day EMA to cross above the 100-day EMA again, right? Because currently it went below it. Once it crosses and goes above it, that is called the golden cross. And that usually indicates growth, which is exactly what the MACD is, right? Let me close one of these indicators so that we have some more to work with. If you pull up the MACD, you'll see that the MACD is basically a measurement of two moving averages, right? You have the 12 and the 26. And looking at the MACD, there's also an indication that there is room to grow because the 12 has crossed over the 26 and continues to rise. So there are only good indicators with regards to Bitcoin. So the fact that it dropped in price by 5 or 6%, that's really nothing alarming. It is an opportunity to buy. I don't know if you consider it buying the dip because we're so far away from the mean, as you saw in the Bollinger Bands, but it is, certainly a pullback. And if you don't own any Bitcoin, yes, I mean, it might be a good level to buy at based on this. We don't really see any signs of a reversal up ahead. Now, when buying the dip, there is something important to consider. A lot of people just hoard their budget and wait for the opportune moment to buy, right? And that's how you miss out on opportunities. So when Bitcoin was at 6,000, and I know this because of, just taking the temperature from the Discord comments and from the YouTube comments, people wait. They're like, oh, is this the bottom? Is this the bottom? Let me go in now. Should I go in now? No, I'll wait. Is this the bottom? Oh shit, it's rising. Oh shit, it's continuing to rise. Oh fuck, I missed the boat. I totally missed the boat. And it continues to rise, right? It goes from 6,000 to 7,000 to 8,000. You could have bought along the way, right? But you have this feeling that you somehow missed out. And so you just keep your money on the side. And then you see Bitcoin rally massively and it gets to 11,000. It gets to 11,200, 11,300. And you're like, damn, okay, I don't want to miss this. So now I'm going to put it in. But it's crazy how human psychology works, especially when it comes to investing. Investing is one of these activities that I think really expose the human psychology. People are afraid to sell, as to stop the bleeding as the market is dipping, and people are afraid to buy when the market has dipped because they feel like they aren't getting the best price and they want to wait for it to dip further. You really have to kind of retrain your brain out of these normal impulses that humans have, right? In investing, you have to retrain your brain. You see a dip and you say to yourself, this is an opportunity to buy, right? If the market starts taking a hit and your portfolio is bleeding, you lose 5%, you lose 10%, you lose 15%. People they can't bring themselves to sell because to them it feels like they're selling at a loss. Whereas, if you have a little bit of more foresight and you could see a little bit more past the trees, you'll see that selling at a 15% loss is a lot better than holding on to a portfolio that has bled 75%, right? So you kind of have to retrain your mind into having better investment strategies, right? Into incorporating better investment strategies, better exit strategies, better entry strategies. So anyway, I digress. So yeah, I mean, this is for Bitcoin and the market in general, this is considered a little dip. We don't see any trends, any reversal trends forming yet. That doesn't mean it can't happen. We just need market confirmation to do so. As a matter of fact, based on the MACD, the RSI, the volume, the possible inverted head and shoulders, the fib levels, the trend lines, we do see that we are still in a bullish pattern that is now consolidating. Again, if we break out below this trend line here, if we break below, for instance, this 0.7786 or head towards the 0.786 level on the fib, if this RSI starts reversing and heading back down in unprecedented fashion, as we said before, anytime the RSI hit the 30 or went below it in the recent past, we have gone to an oversold level based on the MACD. We have some growing to do. So that is the market update today. Hopefully I provided you a little bit more clarity with what buying the dip means and how to calculate the mean and how to assess whether we are reverting to the mean. You always hear the cliche, buy the rumors, sell the news, right? But there is a motto that is a lot more important than that, that should replace that buy the rumor, sell the news motto in your mind. And that is buy the dip, sell the rally. Buy the dip, sell the rally. We get caught up in this hodling mind state in crypto. But if you're up, 100%, if you're up 80%, if you're up 200%, yes, you can take some profit. There's nothing wrong with that. Buy the dip, sell the rally. And I will leave you with probably my favorite Warren Buffett clip ever, where he basically says BTFD, but in more polite terms. Subscribe here, hit that notification bell, leave a comment, leave your crypto addresses in the comments, join the Discord, it's free, sign up to the Patreon for the trade alerts. Stay safe out there. Peace.
I never know what markets are going to do. There's never been a time in my life when I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I've never felt that I knew it, and I've never felt it was important. We're a more aggressive buyer when they're going down. I mean, I feel much better when they're going down. But